JB here. Hope everyone's doing outstanding. October 21st, 9:14 on this fine Tuesday morning. Talk really quick about the market. Some names I'm looking at go from there. SP futures just pushed in the green a little bit ago, dipped back into the red. So I would call it mixed this morning on the heels of yesterday's over 1% rally. No news, no crazy catalyst yesterday. You had, uh, I guess, the prospects of the government shutdown ending this week was some of the headlines, right? And you also have the possibility that the U.S. and China are going to have some positive trade talks this week. So outside of that, there's nothing, right? We have CPI data on Friday. Earnings season starts to kick up here after the close. We have Netflix, we have Tesla tomorrow, IBM, Intel, some other names, but it's I wouldn't call it like a news vacuum, but uh, just lack of catalyst, right? So next week we get the Fed meeting. That'll bring a little more volatility, and then I just hope that government shutdown ends soon, and we can get to back to somewhat like a normal data cycle, right? But take a look at market. Strong rally to highs at about 10:45 yesterday, and then range bound, trading like a 2.5 to 0.3% trading range for the rest of the day. The VIX, which had soared into the 20s, back-to-back red sessions, and then also, I mean, I try and always look at a glass half full, or at least be somewhat optimistic on the market. So if one of the things you're looking at that could be construed as somewhat optimistic here would be that the yields, the 10-year under 4% for the first time in a couple of days on back-to-back sessions. So that's good stuff. And I think if it stays under 4%, you can make the case that that might provide at least the market some breathing room, right? And all that talk. Who remembers the big beautiful bill? Was going to create this huge budget deficit and destroy create this cycle of the U.S. not be able to find it, pay their debt. The financing part of paying the debt is going to supplant pretty much every other expense for the U.S. government. At some point, that will happen, right? I mean, it's got to get sometime. It's funny. It's like a couple months ago, everybody was talking about it. No one's talking about it, but that probably should be talked about and get rectified soon. But all these different scenarios that have taken place have kind of got pushed to the wayside. I mean, when the yields are rising, everybody's talking about it. Now they're lower, right? So anyway, would like to see the yields remain under 4%. And I think maybe this week I talked about the ranges 558 and 650 and 653, huge spots for me on the SPY when we get some more weakness at some point in the coming weeks. On the flip side, 675, that's the upper Bollinger Band, might provide some resistance on the way up. That's overall markets. Also, some of note, right? With the markets kind of chopping around the last couple weeks, or at least the last week or so, that 50-day moving average is creeping up on the SPY. So some of it that's just a function of the markets kind of being flat, right? As the market remains flat over time, that 50-day moving average is going to creep up. But you're going to have those rumblings of people say, oh, here comes the 50-day moving average. Big trend, right? And the trend is your friend. But something to watch. So you take a look at the amount of stocks trading over there. 200-day moving average still in the 60s. The amount of stock trading over there, 50-day moving average is like right at 50%. So you can make the case there's room for other names to start to get over their moving averages. That might provide some more legs for the markets. All right. So that's overall markets. Now, just quick on some individual names. I don't know why I don't have it up here. But first, I didn't even talk about it yesterday. But gold, I finally dipped my toes in some dust calls on Friday. Just as that, not trying to time, right? I'm not going to sit here and try and time the top in gold, and maybe gold goes to 5,000. I don't know. But looking at the chart, historically speaking, massive rally it's had this year, you have to think at some point it's going to be a pull. And when it happens, it's going to be massive to the point where these implied moves on some of the positions like the GLD puts, calls, what have you, they're going to explode just because. Even if it's not that huge move, a 3-4% move on gold is tremendous, historically speaking. So then, sure enough, what happens? Monday it bounced, so the dust calls were down, like 33% or so, and then overnight gold just starts selling off. No news, no catalyst really. It becomes one of those little snowball effects, right? It's like it starts selling, sell, and then just accelerated. So we'll see how it plays out here. I have my gold futures. They're down 3%. I think if you look at the spot, they're like down over 4%. It's still sitting here at $4,200. So we'll see how dust plays out at the open. It's at 1080. It closed at 930. Oh, did it close at 975 yesterday? Well, I don't have it here. 952. So it's at 1080. My November 13 calls, they might be up 50, 60% at the open. I'm going to wait till 100%. Once they hit 100%, I'll close them out, ride the rest. My other side of me wants to say, hey, I'm going to add some more spec lotto calls to play from further downside in gold. But for me, I'm just going to hold those dust calls. And as they continue to go up, I'll keep scaling some out and go from there. All right, so that's dust. Now, quick on some other individual names. SanDisk all the way up to 152 right after the open yesterday. Just some follow through. I mean, the stock closed at 140 on Friday. So nice gap and go. Use some of the move to close some of the calls out for 100%. And then it kind of got stagnant, fluttering around that 150 handle, close some more out for 100%. And then I just hold a few more. So the thought yesterday was, do I lock some of those in, lock the rest in, go out to get some strikes into next week? They report earnings November 6th. So the implied volatility on the calls past that week are insane. They're already kind of insane into next week. But for me, I'll just continue to hold them. It's actually gapping down $2 here in the pre-market. So I might just look to close the last of those calls out today and then revisit. But it's one of those names, like, I mean, I was talking about on Friday afternoon and yesterday, this could be an overshoot scenario. And you do comparisons with Micron, trades 7-8 times revenues. SanDisk is only 3 times revenues. Recent spin-offs, so the financials are tough. People haven't really seen the name much, so maybe there's more price discovery. So that's kind of the thought process here. The thing is, if it does have some FOMO, what's the risk reward? And when the premiums are $3, when the calls are $3 for a strike that's $20 out of money with a week and a half left to expiration, that's not my risk reward setup, right? So if I see if the premiums start creeping out, maybe later in the week I'll look for some more strikes there. But I'm happy to be riding free with some profits on SanDisk. And then Reddit, this time yesterday morning, Reddit was gapping. I think it was 201. It had closed 194. So on Friday. Unfortunately, didn't have calls into the week, but then it continued to show signs at the open. So after the open, it was rallying 204, 205, and got spec lottos, got to 230s. It kept going by within 15 minutes. I was able to close some out for 100%, then some more out for over 150%. And then I used some of those profits to get some higher strikes, just because if there's continuation, it's not going to matter what strike I have. They're going to be all up hundreds of percent. So that was the thought process there. Sure enough, hits 211, which was kind of that area it's been hitting over the last week or so, actually the last 12 sessions, and then sold off, still closed up 4%. Let's see here, sorry. But off the highs. And then this morning you have, I guess Citi put them on a positive catalyst watch, 90-day positive catalyst watch. They do this on a lot of different stocks. I think their price target was 230. It took it up to 250. And I don't know if Raymond James did the upgrade. I don't know if that was yesterday or Friday, but they upgraded the price target to 250. So it's gapping here in the pre-market. It was actually 211, which was yesterday's highs earlier. If it breaks and goes, I could see this having a massive move this week. I put it on a watch list. So it's just a matter of time when it has a massive multi-day move, not just a 4% one day or 6%, like up 6%, up 7% the next day. And when that happens, obviously those premiums are just going to compound. It's going to be some nice multi-bags. So I'll continue to hold those strikes. I won't add anything more, but I will look to scale some out on the way up. That's Reddit. And then SSYS. I did talk about SSYS on the watch this morning. It's one of my old favorite names from back in the day, 3D space, been trading since at least 2013. And it was up this morning, yesterday morning, and so was DDD. Like all the 3D printers going up. I don't know if it was just a trend in the sector, but then I started looking at the calls and I'm like, January strikes are getting hammered. The January 15s, by that time, I don't know if it was a couple thousand hit the ask. So then I was looking for decent risk reward to play for upside. It was already running. And so I went and I'm like, I don't want to hold these to January. I didn't want to pay 80 cents. The January 15s, I think, were 80 cents when I was looking. So I went and got those December strikes. And they just kept going. Then it was over 12, then rallied into the end of the day. Big candles, closed up nearly 14%. 50,000 contracts traded on the call side and like 700 puts. So most of the day it was like 100 puts. When there's smoke, there's fire, right? So I don't know if the fire is some more news. There's always been buyout rumors on this name or buyout news in the 20s, right? So substantially higher where the stock is trading right now. Not only that, the open interest went up from 4,000 up to like 30. Let's see if I have the strikes here. Of course, I don't have them handy. Sorry about that. 25,000 on the open interest on those January 15s. There was 4,000 yesterday. So that means those are opening positions. Anyway, I just like to set up here, even on a chart basis. It breaks over 1280 this morning. I think it heads to $15 in the coming days. I'll lock some calls on the way up, ride the rest. So that's SSYS. SERV Robotics, nothing to write home about. I put this on a watch list. It's up 2.5% yesterday. Closes up 2.8%, and that's like a disappointing day. So I mean that's a good thing, right? Because I expect more of it, especially after its pullback at the end of the week. But just going to continue to follow the same playbook on it. Lock some in on the way up, and then if we get a dip, 1375 holds, I'll look to add some more in the dip. Also got some Roku calls yesterday. 50 move on, two reasons. The chart set up over its 50-day moving average. I think it heads over $100 this week and higher. Looking for decent risk reward strikes, so I got those 105s. And then on Netflix earnings. So Netflix has like an 8% implied move. I put this on the watch list too. It almost, I'm not saying there's not expectations for Netflix, but it almost seems somewhat muted this quarter. So they removed their monthly average, their subscriber and news. So that's not going to be the catalyst for the stock, right? It's more of an earnings story. Crazy back in the day, Netflix used to lose tons of money. So to hear it as being a earnings story is kind of, funny if you follow Netflix over the years. But to me, it almost seems like there's an opportunity for a beat and raise, and I think that might surprise markets. So it's been getting some upgrades. It was all the way down in the 1150 range, I think, when you had Musk trying to incite a or cancel a subscription campaign against Netflix. I don't know if that's going to have some kind of hit on it. We'll see. Um, we're getting close to the open here, so I don't want to go too far here on the rant. I'm trying to think of some of the other names. Reddit, SERV. TripAdvisor this morning. Starboard's at some kind of 13D activist investment conference. So there was rumors they were going to announce or at least talk about their position in TripAdvisor, which they did this morning. Ironically enough, what does he say? Oh, they should sell off their fork segment, right? The big story on Trip to me, outside of it being a well-positioned company fundamentally wise, there are two segments, the fork and the Viator, excuse me. Those segments alone are worth more than the company, in my opinion, if they spun them off. So I'm not sure if I'll get some calls. I don't want to chase the premium buildup that'll happen at the open, but a name I'll continue to watch. Let's have a great day, folks. I'll be back. Rock and roll.